Well, here we are, team. Another YouTube moment.
Yay!
So the story we're going to say today is we recently made a fortune. And we also lost a fortune shortly after.
In a very short period of time.
So if you stick with us, we'll tell you how we made a whack load of money and then lost it almost immediately. But before we do that, Teen.
Yes, we would like to, for anybody who has not visited our channel before, we would like you to press that subscriber button and also to ring that bell so that you get all the notifications of everything that we're going to be talking about.
And give us a thumbs up.
Yeah, that would be great. That would really help our channel.
So here's our tale of woe. Our son came over to visit us in late November, and we were just chatting, and he'd been doing a bit of research on investments. He likes doing that as well, and he'd set up a Google alert for Sequoia, the finance venture capital company in Silicon Valley. And he set up Sequoia because they're the grandfather of financing in Silicon Valley. They have financed some of the biggest names like
Apple and Google and Oracle and PayPal.
So we had no clue what Snowflake was. We'd never heard of them. All that we knew is it was snowing outside.
It was snowing at the time.
So after our conversation, the next day Tina and I sat here and did our Google research on Sequoia and on Snowflake. And the Snowflake really is an interesting concept. Yeah. It's a unique concept. It takes something that's readily available from other companies and makes it unique. Anyway, we're not going to go into that. If you'd like to know about it,
you can Google it.
Google it. There's plenty of YouTube videos about Snowflake. We decided we'll buy it.
Yeah, we decided what the heck.
So November 25th, we bought it, and the price was
$287 US per stock share.
So this has never happened to us before, but the very day we bought it in the morning.
Yeah. It
just shot up.
It was going up and up and up.
That day, we were seeing it going $5, $10, and we're thinking, holy, this is great.
And we kept messaging our son saying, it's gone up again, it's gone up again.
We were having great fun, great entertainment with it. Well, the upshot was, in 5 days, it went from 287
to $3.49, and we thought this was amazing. We were now making $62 a share.
And that's US, so when you convert it to Canada, it's like $100.
Yeah, we thought this is great.
So we made $100 per share.
But then
the graph stopped going up.
And it went the other way. It rapidly started going down. Well, actually going down quicker than we could see it.
It was like a nuclear submarine that had been caught on the surface. It was dive, dive, dive.
And it was like, oh my God, what have we done?
So I'm saying to Tim, we've got to get out of this before we lose everything. And
of course, I was saying, no, hold on to it, Norm. This is going to be the next Apple.
We're buying it forever. Yeah.
But I guess common sense then prevailed. Norm took control.
So I immediately put a stop loss on, and I put we were looking between 290 and 295 to get out of it.
Yes.
So I put the stop loss. It triggered at 295. We got out of it.
Yes.
So we made what?
We made some money.
$8 a share, enough to cover the trade, and
it was great. We did make a bit,
put a few dollars in our pockets. So why did we bail? That's the big question.
Yeah, I guess because we panicked, didn't we? We didn't really know that much about IPOs, did we?
Well, we had done quite a bit of research, but there was a lockdown coming, or a lockup. So the lockups are put in place in part to protect investors. So the Snowflake lockup was 6 months, and the first one was due to trigger on December 29th. So we were getting close to it, and I just figured that if all the insiders, the initial investors, the employees that had got stock options, if they all exercised them and started selling, then the price would continue to go down. So that was one thing.
But in actual fact, 2 days later, it went the other way, didn't it, Norm?
Oh, yes. So Tina was right.
It shot up to 390s, so had we not sold, we'd be really in the money.
But Tina and I aren't big fans of roller coaster rides.
No, and actually even the real ones I don't even go on either, let alone in stocks.
So what are the risks of IPOs? Well, they're volatile. We all
Yes.
know that.
Yeah.
But the initial investors win. And who
Yes.
tends to lose?
Probably the rest of us that come in after the initial investors.
The smaller
Yeah,
retailer
yeah,
investors. So you've got to be aware with an IPO that there are lockup periods, and when those lockup periods become due, more stocks come on the market, and it's supply and demand.
Yeah.
Generally, the more stocks there are, the price goes down because the demand maybe isn't there for it.
And most IPOs in 1 year, right, have this, don't they? But actually Snowflake had 2, didn't they? So
Yeah,
it
so
was...
they had the initial 6-month one coming at the 29th of December, and then there was another one this coming March in 2021.
Yes.
And that'll be the big one where they'll release around 500 million shares or something like that.
Yeah, it's a lot, isn't it?
But what we have seen through IPOs, and it's why we've kind of avoided them, is that a year after most IPOs, the price on the market is less than what it initially floated at. If you want an example of that, look at GoPro. That's a complete disaster as an IPO, and everybody thought great things about GoPro because it's a fantastically marketed product. So we would say, don't invest your mortgage payment or rent money in an IPO.
No, but there could be a strategy, hey Norm, that you could buy after the lockups.
Yes.
And if you were still prepared to kind of live this bit of a roller coaster ride, now we know about this, we'd be going in with our eyes fully open, wouldn't we?
From the homework that we've done, we would probably say that there's a good bet that Snowflake is a good buy and hold for the future. And who knows, everybody's looking for the next Google, next Apple.
Yeah.
And this might be it. Who knows?
And Sequoia Finance has a great track record, haven't they? I mean,
It's a 48-year track record of investing. They gave Steve Jobs his first financing, and he was still working at Sega Computers when the owner of Sequoia met him. So if Sequoia's investing in them, we felt it was worth a look.
Yeah, because they really know what they're doing, and we kind of were just going along for the ride, weren't we?
So Snowflake, it's something that we'll look at again,
Yes.
possibly. But we just had a great deal of entertainment.
We did.
With our initial try at it. And we should have sold when I said to sell. If we had, we could have been having his and hers Porsches, but what the heck.
So
Back to the drawing board.
So are we going to buy Snowflake again, no?
Well, we shall see.
I'm hoping maybe.
And just in ending, we want to reiterate, we are not financial advisors.
No, we're not. Anything that we're talking about is just what Norm and I are doing.
And it's purely for entertainment purposes only.
It's just what we're doing in our life, isn't it? And we are not recommending anybody to go do what we're doing, but it's a lot of fun for us to tell you what we're doing.
And it's a neat story.
Yes.
So thanks for joining us again on YouTube. We really appreciate it.
Yeah, and we hope everybody's staying safe and keeping well.
And we're going to see you on the next video sometime soon. So, bye-bye.
Bye-bye.